this Wednesday, the 16th of September. Welcome, my panelists to today's show on Frontier Opening Bell. Agnes Jita, who is partner at GBS Africa. Thank you so much, Agnes.
It's a pleasure.
Good to see you again. And Onyeka Ejema, who is head of industrial sector analysis at Vectiva Capital Management. Good morning, Onyeka.
Hi, Boston. It's a pleasure to be here.
Good to see you again. Thank you so much. Not a very particularly solid day for African stock market. So if you go through the 5 of the securities exchanges on equities that we track on a daily basis, you can see aside Kenya's 0.30%, Nigeria softens by that little margin. Ivory Coast was much bigger by about 1%. Egyptian market also down 0.06%, and the South African GSE a negative 0.35%. So we'll just take that in our stride and moved on into the East African corridor, where the Kenya's central bank raised 18.7 billion shillings in treasury bills. The shilling is lower, about 108.7 against the US dollar, a bit of pressure. Reuters reported that remittances from Kenyans into the country are beginning to slow down a little bit. I'm sure Agnes will speak us up to that. And I don't know how much Agnes would like to pay for the price of petrol or diesel when she gets back into Nairobi anytime soon after the coronavirus. Safaricom investors trade very significantly good volume of these telco giants, 3015 shillings per unit on Tuesday. Zimbabwe's inflation slows to 761.02% year on year. Well, they can, whatever they have, they can take it in their stride. The Zimbabwe Stock Exchange reported 2 days ago, I found that very interesting, that since the reopening of the stock exchange after it was shut down by the authorities for a couple of weeks, the level of share dematerialization went up nearly 60%, but the equity cap was down 23% since that time. We've seen some steady decline in value of the total market capitalization. Okay, so Agnes, speak to us about the market, the treasury bills and the currencies, and maybe a little bit about the price of petrol, which we're also facing here in Nigeria.
Oh, thank you very much, Boston. Good morning, everyone. So the Kenyan market, up until a fortnight, the central bank has had a daunting task of managing a market that is awash with liquidity from the complementary physical and monetary and prudential responses, obviously, to COVID pandemic and its fallout. This was on a backdrop of a persistent local currency weakness, even though the link between the shilling's performance and the liquidity has weakened or blurred in the recent years. However, in the last 2 weeks, the stance has shifted. So far, the regulator has been in the market twice, injecting about 35 billion Kenya shillings to support the cash-constrained banks. This follows increased liquidity absorption through the government bonds, which have a longer-lasting effect on the cash market. Obviously, we saw yesterday treasury bills going up, and of course this is just by efforts by the central bank to try and support the market. On the Kenya shillings, of course the Kenya shilling has weakened against the dollar, but I think one positive thing from Kenya is that we have high level of forex, currently at $8.9 million, which is equivalent to 5.4 months of import cover, and also the shillings is supported by strong remittance from the diaspora. We spoke about it a few months ago, that diaspora remittance has continued to flow despite the impact of COVID. So the shillings obviously is weakening because of demand from importers and of course a lack of willing sellers in the market. But the market looks, we shouldn't worry much about. I think that's going to fluctuate in the coming week. But there is support in the market to support the shilling.
Yes, Agnes, there is no significant pressure that would push the shillings significantly below the dollar at that level. I see just holding around the 108, just a few notches up and down. Kenya surprisingly has been able to get its remittances up to speed despite, even within the COVID-19 period. I think that's quite commendable for this East African economy. Let's look at Nigeria, by the way, with a whole raft of fast and furious activities from the Nigerian central bank intervening in real estate, in agriculture, in solar energy, and what have you. But the oil is still the biggest headache for Nigerian economy, not with the revisions in terms of demand, global demand by OPEC and by the International Energy Agency. Oil prices, fortunately, is back at $41 per barrel this morning for Brent, which is Nigeria's benchmark. The interventions in the COVID-19 is not yet over. One of the largest cement makers, Bua Group, supported the central bank effort, and of course we will now look at the industrial goods. We've seen some movement in the share price of Lafarge Africa in the last couple of sessions, Onyeka. Meantime, today in the afternoon, we're expecting Ghana's second quarter GDP and August inflation report. Onyeka, what's the movement, what's driving some of these sentiments in the industrial goods space?
Thank you, Bosen. So at the moment, the industrial goods sentiment on industrial goods stock has not been as negative as most of the other sectors on the exchange. The sector still reports a positive year-to-date return and has been consistently posting positive monthly year-to-date return, albeit very marginal. And it's largely for me because of two reasons. One, there has been a very fast pace of recovery from the hits that revenues took during the pandemic, during the height of the pandemic. We saw companies like Dangote Cement's top line take a hit of around 28% in April, but recover very quickly in May and June. And the expectation is that they'll continue to recover really quickly. The federal government and the CBN initially were expected to slow down on their infrastructure spend, but have sort of seems to commit to driving even more infrastructure spend in the short term, in the medium term, and over the long term. And the outlook for these companies they're looking even more positive during this pandemic, which is very interesting. And so we are seeing investors sort of rewarding that. And then the other thing is it's really just investors that are still playing, the few investors that are still actively playing in the equity market are only looking to invest in fundamentally sound stocks at the moment. And at the moment, there are very few stocks that are still that are relatively unshaken from the impact of the pandemic. With attractive prices all around. I know that WACO prices are still around 13 now, which is very far off their consensus target price. Same thing with Dangote Cement. And so we are seeing investors still cherry picking here and there. That said, most of this is still just bargain hunting, and the investors are not holding for the long term. So we are still seeing the pattern of buying and then profit taking towards the end of the week.
Okay, I got one question for you in a few minutes, Onyeka. The central bank yesterday released a new framework for intervention in what you call family homes, what you call real estate, trying to see how much can be done to support those who want to build residential apartments that will be affordable and what have you. How much of this will flow into the cement makers that could talk about construction, and looking forward if this intervention that runs into dozens and dozens of billions of naira do come through as planned, as loans at about 5%, as the regulator puts it. But let's touch on with Southern Africa, where tomorrow is a big day for the SARB, which is the Reserve Bank of South Africa. But again, Harmony Gold yesterday reported its full year numbers, having just concluded the acquisition of the South African asset of AngloGold Ashanti, reported $53 million, 828 million annual loss in Rand, and headline earnings per share down about 164. cents. That's quite a big one there. The ABSA's unit in Botswana also reported a profit decline of about 70%, 90.68 million pula a year on year. Meantime, Namibia, high food index, 6.8%, drove headline inflation higher in the month of August. So these are some of the stories. Let me ask Agnes, what's your outlook? Tomorrow is the big day for whatever we're looking at for South Africa. So that's one big story on everyone's crosshairs.
Thank you, Boston. I don't think there'll be like any other bank reporting profit decline. But before I come to South Africa, allow me to comment on Ghana ahead of the MPC meeting today. According to June's result, the inflation was going to be around 10.5%. The GDP was reduced back in March. GDP growth was reduced back in March to contract to by 1.5%. We're not going to see any significant changes from the meeting today. However, I think there's a likelihood that the prospect for the GDP growth might be slightly higher. I think they had overestimated the impact of COVID on various sectors. And speaking to a colleague earlier this morning, that some sectors have performed actually better compared to others in regards compared to what their focus was. So inflation will probably remain around 10%, 10.5%. It rose a little bit higher around July to 11.5%. That was because of panic buying. Of course, people worried that in lockdown they're not able to get some stuff. But I'm not expecting much from the MPC meeting today. But Ghana has been very consistent in regards of how they are clarifying on how they're consistent on their monetary and fiscal policies. So it's a meeting to look to later today. On South Africa, yes, the South African market remains quite challenging. You saw there Harmony it has recorded loss in their annual earning, which we spoke briefly to about yesterday. That everybody who is in gold is king, has been king for the last 6 months. I wonder what's wrong with Harmony, but they've gone on and acquired Ashanti Gold. The South African market remains, say, challenging. There's quite a lot to cover.
Interesting how Ali mentioned yesterday how Harmony Gold hedged against the gold prices, and when prices moved up, they got the bonds, their fingers burnt in that. But let's hope that the purchase of the South African unit of assets of Ashanti Goldfield will help them move ahead. Again, if we see some of this pressure from the market keep gold prices still at that elevated levels moving forward, Harmony Gold might still, in the current year, starting from July to date, but I'm sure they missed that $2,000 per ounce rally significantly, and I think that's what got their books bumped by that margin, quite a whole lot. Some of these miners were reporting 300% profit or revenue within the same period. So,
exactly.
Go ahead, Agnes. Yes.
It's quite reassuring to see Harmony being very confident in the South African market. The reason Ashanti Gold is selling is because they are saying the same thing. They've experienced challenges, and hence they want to exit the South African market. We talked about power outages. Strong unions that demands from the unions are very high. But reassuring to see Harmony, despite their losses, despite being in a very challenging market, acquiring part of Ashanti Gold. So I'm not sure what script they're reading from, but it's always good to see somebody who is positive about a market where everybody else is a bit worried about.
Okay, let me get back to that very important point about the Nigerian central bank and this whole move into the real estate sector. I'm sure Mr. President keeps talking about affordable housing for the people. The Vice President had also spoken about it at some point. you spoke about it a few days ago, really, again, about what is being done in Borno State in terms of massive housing for the people. This should keep my eyes as an investor on the cement sector and construction, isn't it, Onyeka?
Yeah, there is a significant upside, for the real estate sector. Um, we recall that um, the current National Housing Fund scheme, which has been available for Nigerians, to be able to tap into the mortgage market and build affordable housing, has not necessarily been as effective for many Nigerians. And we've seen the federal government look to, launch, upgrades to this scheme. 2 years ago, they came up with the Family Housing Fund, which was meant to raise around $1 trillion, um, 500 billion from 1 trillion naira, 500 billion naira from the government, 500 billion naira from the private sector to invest in affordable housing for Nigerians. And the reason is clear. We have a housing deficit of somewhere between 17 and 20 million. A number that I feel is even severely underreported, given the housing crisis that we have in Nigeria, and in terms of balancing it with the cost of building, the cost of construction, and the stress involved in construction, or the paperwork and everything, the ease of doing business in the construction space, we're still one of the lowest. The cost of constructing a house in Nigeria is actually much higher than countries with higher cost of living, much higher than many of our sub-Saharan African peers. And so it's an important move, not just from the cement, not just for the cement sector, but just for overall quality and standard of living of Nigerians. And of course, it will have a huge impact on the cement sector. At the moment, we do not have any viable alternatives to cement in building constructions in Nigeria. We do not make use of as much timber or bamboo or mahogany wood like you have in some other countries, because of our climate also, and because of the resources that we have. Cement is the most viable alternative. So when you see a boom in affordable housing, you will definitely see consequences in the cement industry also. And this just goes to underline like the long-term investment case for the cement sector at the moment, and just underscoring why investors are becoming a bit more bullish on the sector. And the CBN is also investing quite a bit is also looking to invest quite a bit in the agriculture sector. They're trying to push credit sector to around 10% in the next 3 to 4 years. We know that the 10% has been the benchmark since 2003 at the AU Maputo Agreement, where there was a recommendation for all African countries to raise credit to the agriculture sector to around 10% of budget. We have not hit that in a long time. We typically average between 2 and 3%. Apparently, last year we hit around 4%. This is according to Reuters. We hit around 4%, but there's still a huge funding gap for that sector. We don't budget enough for the agriculture sector, and we don't give enough credits to the agriculture sector. Doing this, we clearly have an impact on a lot of things. Our food production, we know that we also a huge part of our employment, a huge portion of our employment is in that sector. And when we invest more in that sector, we're improving quality of life, we're improving aggregate income also. We can also improve our exports income and reduce our import bill. So there are lots of benefits. Whether we'll be able to hit these targets, it remains to be seen.
quite a whole, I hope the plate is full for the central bank, as it were. We just hope that the fiscal authorities just step up to the plate and take some of this burden off the central bank, isn't it, Agnes?
Yeah, yes, certainly, Boston. The affordable housing debate is sometimes it's quite an ongoing one. The World Bank estimate at least 40% of the world population will need new houses by 2030. So for developers, this is a cash cow. And I think one of the difficulties in our market is the lack of local developers. So I guess Dangote with his cement plant will be smiling all the way to the bank, with this demand for housing everywhere across the world with support from government. You've seen because of high rates of urbanization, so governments are coming up with like the Nigerian government with the affordable housing policies, trying to ensure that everybody has a roof over their head. So for developers or investors in construction and will be smiling all the way to the bank. And I do hope, as you said, I do hope that this actually there is enough support so that we can achieve this goal, ensuring that everybody has a roof over their head. But certainly, real estate sector. It's one. It's a sector for anybody interested in African markets to invest in.
I'm sure the Shelter Africa project also is all about the same housing, by the way, which is where Kenya is involved, Nigeria is involved, the World Bank is involved, and a few more others are also involved. Is one of the basic needs of humans, by the way, which is housing. So you can't take that away. Even in developed economies, new home sales in the US, in the UK, and housing deficit and all that. It's an ongoing conversation, just like food, by the way, in terms of food supply, food sustainability, and all of that. The final touch this morning is on North Africa. To wrap up today's edition of the show, AFDB Asia a webinar unveiling of Africa's economic outlook for 2020 to the Asian investment and markets community shows that Africa is still a prime investment hub. That's according to AFDB's report. But talking about the real estate, Egypt's 5 biggest firms in that sector posted 13% profit decline in the second quarter. There's a new rule for deferred loan installments for Egyptian banks that was issued by the central bank. And reporting on the corporate side, Nasser Social Bank of Egypt says its profit was up 32% to 1.4 billion Egyptian pounds in the month of June. A social bank would definitely see being big business with the pandemic, by the way, with all the support that the government is giving them, try to give loans and what have you up. So I'm sure this social bank, maybe some other regions in Africa can look at how a social bank really works. Is that not so, Agnes?
Yeah, interesting. We spoke in all these. I think it's been a good week for the Egyptian market. Posting profit when everybody else is struggling, and also noting that Egypt was one of the prime areas where they had high rates of COVID, right, in sub-Saharan Africa. So it's interesting that the Egyptian economy has remained strong despite the impact of COVID. Again, sectors like real estate, financial services, these are still very lucrative in our market. Tourism. But you're absolutely right. We spoke about it on Monday and Tuesday that we all need, the rest of us from Sub-Saharan Africa, need to see what the northern part are doing or borrow their notes so that we can perhaps begin to they seem to be on a roll. Suddenly yesterday we talked about the EBRD, coming into the Egyptian market, Morocco performing very well, relatively well. So I know those are two economies. There is Tunisia and
Nigeria, yes.
Yeah, exactly. But certainly, it's very positive, and it's always good to have a positive story.
I think we should just send them a note and say, could you please send us your notes? Your notes. We could just write to President Al-Sisi and say, would you kindly, Your Excellency, send us your notes in Nigeria, in Kenya, down the SSA, and see how you're able to make it just over there by the Nile River and the Red Sea. Give us an idea of how you guys get in. Where's the inspiration coming from? Interesting. Thank you, Agnes Gita, for today's edition of Frontier Opinion. It's good to have you from GBS Africa. and Onyeka Ijoma from Vertiva Capital Management. Thanks to both of you for being my guests today on Frontier Opening Bell. I'll see you again next time. Have a great day, everyone.
We'll get to that at least on a savings account. Putting funds in your savings account is at 1.25%. So you may prefer to still leave your money in your savings account than go for Yes. So for most of the PFAs and fund managers, we may see most of them doing more of placement. So that's still maybe around 3 to 4%. And at least for the banks, they are able to have that fund, though there are limited lending options, but believe that they may still want to keep that cash and look for avenues to make use of them trading.
Okay, let's see how it goes, but it looks like a very interesting time we're in. Uchenna, wrap it up for us on the side of FX. There's still a whole lot of stories out there about the FX liquidity in Nigeria. Where's the situation of things now, as well as exchange rates?
I know the bank the central bank tried to mitigate the risk in terms of closing the gap between parallel market and spot CBN spot rate, but it's looking like those things are just they were too temporal and too unsustainable, because I'm having discussions with stakeholders in this market, BDCs, and some people that actually do have access to this FX, and they are telling me it's not what is being announced really. All the things that have been said to us in terms of supply of USD, we're not getting even quarter of that. So the reality on ground is that rates would continue to soar higher. There's no sustainability to that front. And those people in possession of FX are saying, well, since there is no infrastructure or monetary structure to combat this, I would rather not just jump into selling off my FX, So most participants are still holding on to the FX because there is a high likelihood that there is that projection that price will continue to trade higher towards that 500, not a 500 region. So yes, that's the pressure. The liquidity pressure is still immense. It's still intense. I know that the central bank is trying their best possible, but you can see the combination of the slowdown in global economic recovery, oil prices now looking to trade lower. That is even another pressure on our receipts, and the structure that has been put in place as regards to the regulating PMS from the NMPC is those things are not exactly, they don't provide that immediate effect in terms of pressure release on the liquidity control we get in terms of the FX space. So I know they are trying their best. There's 1.5 billion that the World Bank is still holding on and saying until we have our rates all sorted out before they can come true. But the reality is that there is no viable plan. Let me put it that way. Just not a lack of words. There's no viable plan.
There's so much. The obvious inability of the country to generate FX on a sustainable and steady basis is the background to the entire conundrum where we found ourselves. Not necessarily much of the central bank, I think. I think it's more of you can't spend what you don't have. You can't give what you don't have. So if the economy is not generating FX inflows, how do we get it in? Our main revenue source for FX is oil, and we know where we are on that. Exports is anything to write home about. So, and our FDI is also been trending down to almost zero on a quarter-on-quarter basis. Quite a very tough time, but let's see how it all goes as we move on. Ayodeji Ebo at Afrinvest Securities, thank you so much for your time this morning. We appreciate it. It's a business time for everyone. Thank you so much. Uchenna Minis from Blue FX Nigeria, the managing partner. Thank you so much, both of you, and to Ali Kansachi, who was with us a bit earlier on the show as well. Thank you so much. Enjoy your Thursday. We'll see you again tomorrow. Bye for now.